All right, here we go. So this is Market Talks, right? This is BYOB Market Talks. And I want you guys to kind of get in that mindset of thinking like the big bank, right? I want you guys to get in that mindset of thinking on a big bank frequency, right? That's where I need you all. And so as we log in, and the first thing that we must do is obviously our mindsets, right? And it's our affirmations. And I talk to you guys all the time about affirmations. You know, we talk about the impact of affirmations. We talk about why affirmations are important, but you know, we want to make sure, you know, that we're operating in that mindset, in that thought process, on that frequency. You know, we have to turn up our frequency. And so let's see, what are our, okay, guys, there you guys go, drop it in the chat. But what is our frequency? Our frequency is, I am an educated BYOB master trader anointed for wealth. Okay. I am the signal. You want to proclaim and you want to understand and you want to know that you are the signal. Like you want to know that you can take profit. You want to know that you can read these charts. All my trades in profit. So you're proclaiming that, hey, guess what? We operate in profit, right? We operate in that thought process and that mindset. And so we always want to be there. And so I am 777, which simply means that you've turned the market into your personal ATM machine. That's what that means. All right, so what we're gonna do is I'm gonna go ahead and get my screen shared together. And as I do that, if this is your first time here with us this evening, your first time on the call, let me get a 111 in the chat. And if you are still learning how to cash out, let me get a 222. All right, welcome, and welcome back. Welcome back. All right, so let's talk about what we're going to talk about tonight. And then, of course, after we identify what we're going to discuss, what I want to make sure is that you identify what we want to discuss, which is the BYOB cash out strategy. We know we haven't had a Market Talks advanced in a few weeks. And so what we're going to do is kind of a recap. All right. We're going to kind of go back and recap, because what we did is really kind of dive into, you know, we really dove into, you know, understanding that, you know, the psychological levels and seeing the market from its big picture, right? The top-down analysis approach. And so what I want you guys to really grasp and understand is that what we're about to do is we're going to operate from there. Like we're going to operate from that mindset and from that thought process, right? We're going to go ahead and operate from there. And so it's the purpose of all of this is to see you guys, and so you guys can really understand the big picture of the market. And when you begin to see the market, right, you begin to understand the market, you begin to really grab a hold and understand, you know, what's actually happening in the market, and which is ultimately going to shift. Because what I do know, and I see it in quite a bit of your affirmations, is we're operating under 6 figures in 6 months, right? From a compounding standpoint. And one thing that I definitely want to highlight, and one thing that I definitely want to stress to you all, is that you want to obtain that, but you also want to, before you dive in and you start doing it, you want to make sure that you guys understand you have consistency in your trade account, right? You want consistency, right, in your trade account. You want to see where you are understanding and you're grasping the market, right? You're understanding what's taking place and what's happening. And so this is why, like, these calls are so very important. So So, oh, I got the first question. Why is this like a needle in a haystack? Almost like you guys are hidden from the rest of the academy. This is so dope and simplistic. I don't know. We're not hiding, but hey, we do operate under hidden in plain sight. So, I mean, share, 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 let the world know, because that's what we're here for. You know what I mean? So share, share, share. But I greatly appreciate that. And I'm glad to see and to hear that you are having some success and that you find this easy to use and easy to understand, because that's what we're here for, is really to kind of make this simplistic so you can kind of dive in. All right. So fantastic. I love it. Now, let's talk first. So this is our chart. Now, I'm actually going to walk you through the BYOB cash out strategy. So, thank you, I love you. But Be Your Own Bank is a movement in its totality and the impact and everything. So you definitely should understand that. But thank you so much. I love you guys. So now, from the perspective of this, you see, we're going to start on a 15-minute chart. And so let me talk the phases. And so one of the things I do plan on using tonight is the harmonic scanner as well. All right. And that's because we put a lot of emphasis on that. And if you go back, and you guys should have actually watched the training from when we did the psychological levels, you guys should have actually already gone back and watched that. And if you watch that, one of the things that we talked about is the fact that those reversal patterns, right? All of those things actually happen around those psychological levels, right? And so what we're trying to do is really kind of help you guys see it in its totality, like see it for, in the right mindset and the right perspective, right? So you can get that big picture. But first and foremost, when we talk about the phases, when we talk about that is identify the strategy, right? Identify the BYOB cash out, understand the time frame confluence, top-down analysis approach. We've been doing it, but I'm saying it like that so you guys could, really just grasp it, right? Really just understand it. And so let me go ahead and get on my 15-minute chart. Now, this is actually one of the trades that was called on the scanner. So we're going to just dive in and really kind of hone in and understand. And you'll notice on our morning calls, we're implementing this, right? So we've actually put this into action on our profit calls on Monday through Thursday mornings. So here we are on a 15-minute chart, right? So let's talk about the identification part. So noticing that we're here, or, do I actually want to come? I want one that's clean because I really want you guys to see it. I just want one that's kind of clean. Nothing, that's definitely not a little bit. Let's come back over here. We'll just stay over here. All right. So when you start, okay, you start here on our 15-minute chart. Okay, this is our foundation. This is where it begins, right? This is our foundation. And so understanding that the 15-minute chart is the foundation, you haven't, right? Like when we talk top-down analysis, you really haven't looked at the market from, zooming in, zooming out, really just looking at market structure and things. What happens is you guys kind of log in and this is what you see when you first see the charts. And you have to be able to take this and make that a trade. How do I take this and make that a trade? All right. So what I want to do is, as we kind of look at it, okay, how do we do that? So let's walk through this slowly. And as you guys have questions, if you got comments or anything, testimonies, make sure you drop it in the chat, because this is a training call. Fortunately, we've had quite a bit of opportunity to train this week on our profit calls. It's based on what the market does, right? But we've had quite a bit of opportunity, but this is specifically a training call. So, ask your questions, right? So as we look here, okay, our leading indicator is the stochastic, okay? The stochastic, then we have our Hikanashi candles, and we have our PSAR. So we have our stochastic, we have our Hikanashi candles, and we have our PSAR. Now, as you can see that this is what we have, what you're looking for, obviously, this is a guiding indicator. And I want you guys to get in the habit, because I do it too. I mean, you're always going to do it. You're always going to look at the charts and see candles. right? You're always going to look at the chart and see candles. And so it's so important for you to put emphasis on the fact that you want to look at our stochastic, right? We want to, see what it's doing, because that's the leading indicator. That's the indicator that's guiding. And so, because of that, you want to make that emphasis. You want to make, it's important that you look here. All right. So now here I am around my 20 and I'm here around my 80. So as you can see, what I'm looking for is that blue line to cross over the red and upward momentum. So here we are around this 20. Now, once again, okay, because I've had this question, and that's why I say ask on the calls. This is what you're analyzing. When you get on a chart, you're looking to see, can I trade here? Like over here, my stochastic is starting to get a curve, right? But yet I still have green candles. So you're looking here. But in order for you to know what to look for here, we have to go back and look at historical data. And that's why we're analyzing, to show you how a trade played out, right? We want to know how the trade played out. And so that's why we always go back and look at what's already played out. But you have to be able to take what we're discussing and look at this, because right here is where we are. Right here is our live market. This is our current time, our current price, right? And your money comes in you being able to accurately predict where the market's going, right? This is where our money comes from, right? This is how we get paid. So when we're looking on here, just kind of understand that we're looking at this in a past perspective, okay? That's what we're looking at. So now here, blue line cross over the red around the 20, right? Blue line cross over the red in an upward momentum. And you can see it's around the 20. And then I'm looking for Hikanashi candles and a PSAR. And so what happens is I have that green candle with a flat bottom, and then I'm also looking for that PSAR. So what I'm gonna do, so you can see this, okay, is you see where this crossover and crossover happen, crossover and cross up. I'm like crossover and crossover. So where this crossover and cross up began to happen, you notice that there was nothing ready here yet. Yes, I had a green candle, it has a wick on it, but I'm showing you this so you can actually understand that you actually have to wait on the setup. You have to wait for it to happen. Now, next week, maybe, depending on how far we get tonight, we'll come back from that top-down analysis approach where you can see the big picture and then kind of drive in. You like doing your confluence first and then kind of drive in for the strategy, right? So we'll probably double back around a little bit next week, just to kind of recap and make sure everybody is up to speed on where we are and what we're doing. So here we have that blue line cross over the red and an upward momentum. Then I have actually got a green candle. Let me zoom in so you guys can see. So I actually have a green candle right here with a flat bottom. All right. And then of course, here's my PSAR, that PSAR flip right there. So now what I'm looking at, all right, actually don't like how that took forever, but now what I'm looking at, okay, what I'm seeing is, I'm seeing the setup. That's the BYOB cash out strategy right there. So we completed the first step, right? We're done with that. However, we can't push the button just yet. What we also have to do is time frame confluence. So my time frame confluence, I'm on a 15-minute chart. So I'm going up to my hour. So now let me come up here to my hour. And what do you see? Well, you see we're starting to get that confluence there, right? It looks really good. So, and now you see, I still don't see where I am in the market, but I do see, right? I haven't even put a support and resistance line on here yet. So all of this, so understand that you can make money as you learn this information. You can profit as you learn. So you can see you have that green candle, right? Where that green candle is pushing up and that upper momentum. And also look at my stochastic, right? That stochastic is starting to get some curve. So here we do have time frame confluence on the hour, but let's not forget, I must drop down. I need to drop down to my 5-minute. Now let's not look at all this activity that actually took place. I'm gonna zoom this over just a little bit. I'm gonna scooch it over, and because I want you to see where the arrow is lining up. So right there, I'm overbought, right? But my stochastic is still pointed up. It hadn't started that curve down yet. And then we got green candles. Everything is still buying here. So obviously I need my setup on my 5-minute, right? Now, trust me, it doesn't have to have the flat bottom per se, but I still need that setup because that happens first. That is my tighter entry. So I do still need like my stochastic, my PSAR, right? My candles. So I still need that sort of alignment, right? Now we're not trading on a 5-minute, okay? I'm not trading on a 5-minute. So I'm not really concerned. Like, you see how this one has the wicks and all of this, but it is a tighter entry. It is, the more you're going to see more activity. So this is why we drop down. The higher time frames tell me where the market's going. So obviously that is impactful as far as what I'm looking for, what I'm trying to do. But my lower time frame is where all the movement is, right? That's where the activity is happening. So that's the BYOB cash out strategy. Now, guys, you would have got your 10 pips and cashed out, or you would have traded to your first support and resistance line. And honestly, with the amount of liquidity and the things that's been happening in the market, it just cashed out. If you'd have been in this trade, you would have just cashed out. And this was a while ago. Look at how many hours this was. So I could, and I'm saying that, I'm stressing that because we get that question a lot. Like, well, how long? And, how long does a trade take? It depends on the market. And look, this is this new candle that's 9. That was 8, 7, 6, 5, 4, 3. Look how long, hours, right? Hours that this has literally been from where we got our confluence. And so you would have just gotten it. So this is where patience comes in, because you have to be able to trust your analysis, trust your setup, trust what you did, in order to really kind of just dive in there. And so that's the strategy. Now, that's before we even took a support and resistance line. That's before we looked at the big picture of the market. Like, that's before all of that. And so, when you think about it, can I begin profiting? Can I begin as I'm learning? Can I begin understanding? Absolutely. So, but this is what we would have got in. You would have made some money, and this would have come up to your first support and resistance line. But tonight, because, we always want you to learn the market, see the market, understand the market, we want to make sure that you dive in and you really grasp this, right? You want to grasp it. And so let's go ahead now. And before I even move on, any questions, comments, or testimonies before I move on? Because I'm going to pull up the harmonic scanner as well. All right, no questions, comments, testimonies? Gotcha. All right, so just if you have them while I'm talking, just drop them in the chat. So now here's the scanner. All right, now to get to the harmonic scanner, obviously everything you can get through im.center. All right, so you log into im.center and you come down here to, obviously you pick your strategies. There is a vibrata in here. I use the one at imlwebanalyzer.com, but you see harmonics right here. And so what you do is you just come here and click harmonics. Now, once again, we're going to get into those psychological levels. And as we get into those psychological levels, I like the harmonic scanner. And I'm going to tell you why. Why do I like the harmonic scanner? I like the harmonic scanner because it identifies reversal patterns in the market. Now, I am not, yes, there is training in the academy, but I am not about to come do all these measurements, right? It's just, it's not gonna happen. It's not a thing where you guys are like, I don't understand math, or no, that's not what it is. Because I tell anybody, if you can make sure that you get your check deposited the right way and how much money you're supposed to receive whenever you're supposed to get paid, then you don't have a problem understanding math. You have a problem with things that you like, right? Because the only time you have an issue counting and don't understand math is if you cannot count your deposit when it hits. Like, you don't understand, when it's there. It's actually streaming on YouTube right now. But as far as the actual recording, it won't be tonight. Maybe, Friday, Saturday, it'll be uploaded. Now, but the stream will be there. So, you can watch the stream. So now, as you look at this, all right, so I come here. And I just randomly grabbed one. This one is new. The GBP NZD it just got on there. I actually just took that off, so we're not gonna go back to that one. But we'll sit here with the actually I might just let me write that one down too. We'll see how the market does. So what you want to do, and so this is good for me to be able to walk you through it. So, or let me just say what I do. Is I come back over here and I just write the numbers down. All right. You see me put them on the charts in the mornings. I just write the numbers down. Now we don't blindly take the trade. This is why we're gonna walk you through this. Now we're still talking psychological levels, right? And around these psychological levels is where your reversals happen. And the deeper we get into this, the more, you will understand it, like you will grasp it. So all I do is I write down like this: take profit 1, 2, and 3. Now, I really wish it wasn't called take profit 1, take profit 2, take profit 3, because what this is support and resistance lines, okay? That's what it is. It's support and resistance lines. You have to be able to actually analyze the market in order to understand or feel like it's going to come here. This is not an automatic take profit, okay? It's not 3 trades. It's not, one trade where it's coming here. It's not any of that. It's just a support and resistance line. And you analyze the market and make the decision if you want that. So we start on the 15-minute chart, 10 pips and cash out, and then we advance to zone. We advance to support and resistance lines, because anything over 10 pips, you need to understand your support and resistance, okay? And that's actually gonna make sense, as we kind of go through this, right? It will make sense, all right? So I wrote that down, all right? And I already have this one written down. And so I'm gonna we can keep both of these. So let me write this one down: GBP, NZD, we'll mark it, right? So now coming back over here with the one that we've already started analyzing, now this one actually triggered for a buy. Now also, let me come back and emphasize something. There are different ones. I say this to you guys all the time, and it might start making sense tonight, right? There are different time frames that you can pull from. Now, you never see me pull from the 15. Can you pull from the 15? Absolutely. But when we're talking about psychological levels, or when we're talking about the different levels that's out there, the higher time frame is what moves the market. So the lower time frame could be a correction to a correction, right? So what you'll notice is more of these are going to play out than these. And as you notice that, as you kind of look at the scanner, the ones that are down here have already played out, or, this one looked kind of deflected. So let's just pick another one. So you see how these have already played out. You see how it's already kind of starting to turn around. So what happens is, as these begin to play out, they start falling off, or they push down. The newer ones, like I said, I looked right before the call, and this one was not on there. Since we started the call, this one is now on there. And so you'll notice that the ones down here, these are already kind of playing out, right? You see how they've already started kind of playing out. And so then as we start, they're already moving. But the ones that don't play out at all, they fall off. It's no need to keep it on there. Like, it's no need for it to still be there. It's really no need. And so if I don't need it on there, then, so this is another reason why, not the reason, but it's an additional reason why I tell you guys, let's not try to be shortcutting and trying to come over here and mark this up and changing things on here. We're not doing that. You just come here, identify the fact that there is a harmonic pattern in the market, grab these numbers, and let's come on back over here to the vibrato, okay? That's what you do. So now I'm gonna come up to the hour, all right? I'm on the hour. So once again, you guys, this should be kind of a recap to some of you guys, right? It should be. And so I don't see where any of those triggered. So if one triggers, I love it when they do, because now you got it double, all right? It's both of them identifying it. So what I'm gonna do is I'm gonna just change these, right? We kind of put that on there. So I'm gonna actually drop the numbers on there. And this is what you see me doing on the calls. You'll see me like, okay, these are the take profits from the harmonic scanner, right? That's actually what you see me doing. And so let's see, 125, 285, okay? Pull it here, come over here. Real easy, right? Doing the heavy lifting for you. All right, doing the heavy lifting for you. That's what it's doing. Now, okay, so let's look at this. Before I even start analyzing, let's look at the actual market. So you notice that this is what they identified, and I'm going to put this arrow down here, right? Just, we already had an arrow. Just for the sake of you guys understanding that this is, we're looking for a buy. I don't want anybody to forget that we're looking for a buy. So we're looking for this to buy. Now, what we do know is this market has been moving up. You kind of see where it pulled back. So I told you, I want you guys to just kind of get in a habit of just pulling in, pulling out, and just looking at the market. Just look at it, okay? Look at it and let it help you, you know, kind of really understand. So now, as you do that, all right, let's zoom back in, get our strategy, everything back on here. And so we identified now the other thing, okay, before we even put a psychological level on here, okay, before we even do that, look at the space in between here, all right? I'm gonna change this to the line chart, okay? What the line chart, tell me why the line chart? Well, my line chart is closing price. My line chart is the closing price. So when I'm looking at take profits, so regardless of where the market open, close, the high, the low, any of that, the only thing the line chart shows me is the closing price. So remember, connect the dot where, you know, so every candle here, every hour, we get another dot. And so what the market's doing here is it's connecting the dot. And so you kind of see like that line that's kind of flashing, this beat, you know, look like a little beeping thing right here. It's gonna give it when we get to 10 o'clock, the only thing you're gonna see is where the market closed at 10 o'clock. So I like the line chart. So you always come in here and kind of make those adjustments. So I'm making that adjustment where bam, I'm moving it down. I don't care how many pips it is, you know, just like here, you see these touches here, because I'm buying, I'm moving that down, right? I'm moving it down because I want it touching. So that should help bring like a little bit of clarity in helping you see. And now we're gonna take this back to our Hikanashi candles. So now when I'm looking at my candles, what do you see? I see opportunity, like I see how it's touching on there, right? So that wick up is what created that. Remember, the harmonic scanner uses Fibonacci's. Fibonacci's are strictly percentages. It's not analyzing the market. It's not any of that. It's strictly a percentage from that swing high to that swing low, right? Fibs are excellent, right? But it's a swing high, but I'm not doing it, right? We're not doing that. So now let's look. So now we know we have this. So what will we analyze? Now, I haven't even put the levels on here yet. We haven't even touched those yet, okay? But I want you to start seeing strategy. I want you to start seeing implementation of strategy, right? So look, blue line cross over the red. So let me say this before we do this. I've told you guys, and I'm gonna say it, right? We've been talking about this all week this morning, that it's not about the time frame you're on. We can analyze on the higher time frames, we can do those things. However, we're not trading on the hour, 4 hour, right? I want you to get unstuck on a time frame. I want you to understand how the time frames correlate together. Okay. So my hour, 4 hour, higher time frames help me identify where the market's going. But I'm not using this to enter the trade. Okay. Let's talk about that. I think that's important. So, and then we'll come back and analyze it. I want to show you something, okay? I'm not using this hour candle right here to enter the trade, okay? Why not? This candle is an entire hour. What is happening? You don't even see the activity, all right? This is why I like this 15. Look at what's happening on the 15. Look at how you can see how the candle reacts to that support and resistance line. Let's drop down a little bit more. Now you see more activity, more momentum, right? As far as how the candle reacts. What do they typically do? Touch it, retest, continue, retest, and then keep going. So if the more you drop down, the more you see it, the more you see the activity. So even though I identify here, I don't enter at this space. Like I still have to drop down. This is another reason why we have to drop down when we're doing our time frame confluence. We drop down to enter the trade, right? We drop down for all of that. So we got to get in the habit and the understanding that we have to drop down, okay? So yes, because you get it. Well, can I trade on an hour? Absolutely, you can analyze anything up here. You know, you can look at it all, but it's not how I fine tune my entry point. And if you guys grasp that, then you'll stop having all as much drawback as you do. All right. So let's get back over here. So look here, look where my stochastic started its curve up. Okay, look at where my curve started, but yet I was still selling. Like this market was still selling. So just because my stochastic, remember, it's a leading indicator, leading. That doesn't mean it's ready. It means it's leading. All right. Now let's come over here and look at my 4 hour. Okay. Now when I look at my 4 hour, this is a new 4 hour candle. Look at the rejection that's happening. We haven't even got to looking at the market structure yet. We still haven't even got that far. But look at the rejection that's happening, that you see happening here on the 4 hour. So what I'm trying to train your eyes to is for you guys to start seeing what the market's doing. I'm trying to train your eyes to start seeing what the market's telling you, right? So we already know we have a pattern identified, but that doesn't mean it's ready to just dive in and jump in. You have to analyze it. But what I do know for a fact is when you begin pulling from here and implementing it, especially if you don't know, you've never seen the market before, you're learning this, you're new, this is going to help you. Like this is going to help you start seeing the market, because we already know, because a harmonic pattern was identified, we already know it should go into a buy. I say should because it's not guaranteed, but we know that it should because a harmonic pattern was identified, and harmonic patterns are reversal patterns. But yet I still have to analyze my trade in order for me to take my trade. All right. So here we have it, right? Now, look at this. It looks like it's getting really pretty, right? For me to start looking for a buy, but yet I don't know. Look, we haven't even. So even where you could take a trade, but yet you had a trade opportunity. So now you know why we can always dive in there from a 10 pip and cash out perspective. But in order to do anything else, now you understand why I'm saying that we have to know what's happening on my higher time frame. If I can do 10 pips and cash out anywhere, but in order for me to do anything past that or to take a continuation trade, I need to know what's happening in the big grand scheme of the market. Questions, comments, testimonies. Any questions, comments, or testimonies at this moment? Questions, comments, testimonies. All right, I'm gonna keep going. I'm definitely gonna keep going. So, all right. So let's see. Now, I'm gonna come over here and let's look at the actual market. Let's see where the market is. So now, so you can see it, okay? We're not back to analyzing at this moment. So we know that we have a level. Let me turn this blue, right? We're doing blue for consistency. And this is what we've been doing on the calls in the morning, right? You guys have been seeing it and you're like, you got all these different colors on here. All right. So the first level that I just identified, right, is obviously, thank you. So the first level, right, the more zeros, right, the more significant. So obviously when I'm down here around, right, when I come down here, it's obviously you're gonna have one at 24, right? But the one that's down here around the 20, look at all the zeros. That one is going to have more impact on the market, right? Obviously, that one will have a lot more impact on the market than what we are. But from the major level to level is like 1,000 pips. You know, you're not taking a trade for 1,000 pips. Like, so we're gonna focus on the minor ones. So, I mean, some people do. So let me not say it like I know you're not taking a trade, but you know, we talk a lot about 10 pips. So we talk a lot about 10 pips, and most of you guys are trying to do 10 pips, or you're trying to do like intraday, where you get like maybe 30 or 40 pips. Then obviously we kind of want to focus in on the minor ones, where we kind of got some zeros. So right here is one of those. And then that next one, you kind of see, well, we have the 26 that's up here. All right. So if I look from 25 to 26, right, 100 pips. So that's a 100 pip range. So we're in that minor zone. But let's look at how the market's reacting, right? How's the market respecting this area? How's the market respecting it? So what have we done before I even keep going? We've identified the strategy, right? So we have identified the strategy. We've also identified, the harmonic pattern that was identified, right? And so we've identified the harmonic pattern, and now we've identified 2 of the psychological levels. So why are zeros important? Good question. Now, and then I want to make sure you grab something after I answer this question, right? And and that's the levels at that, the reversal pattern happening around that psychological level. So that's kind of what we just talked about, as far as a lot of the harmonic patterns happen around psychological levels, right? Reversal patterns happen around there. Now, why are zeros important? All right, so we are creatures of habit, right? So it's not something you try to trade on without any analyzation. That's why we didn't start dropping the levels. Okay, I want to make sure I make that clear up front. But we are creatures of habit, which means that from the time we're kids, from the time we're younger, what is one of the biggest things we're taught in school when it comes to math and things? It's about rounding. We're creatures of habit. And so these are actual people that are moving the market. These are the market makers, the ones that work for the bank. Banks actually trade our money, right? So people that work at the banks, the financial institutions, all of these different places, they actually operate with the same mindset, because we're all same people, right? We're people, and people round. Those are things that we do. So last time we went to the store, something might have cost you $28. Okay, 28. Let's just say it was $28.13, and you were at the store and it was $28.13. How much did you say it was? Anybody, drop it in the chat. How much? The total price is $28.13. How much did it cost? And when you get home and say, hey, yeah, most people don't say $28. I'm gonna be on. When you get home and you say, hey, babe, how much did that cost? Or hey, exactly $30. Nobody comes home and say I spent $28.13. But even if you said 28, you're still rounding. Most people will go to $30. And let me point something out with the 2 different numbers that I'm getting. So what did I just tell you? That obviously the number down here with more zeros is going to have more psychological impact. The one here, the 28. So some of you guys said, the 1.20, right? You routed it to there. If I was to come down here to that major level, and that's where most people round. Oh, it was $30. It was $30. But some of you guys do say 28. I got 2 people in the chat said 28. That's a reality. So what does that mean? More people said 30. More people said $30. Some people said 28. So the more zeros, the more impact it has as to how our minds work and where orders are taking place. So it's just the psychology of the market, right? Let me make sure you guys stay muted for the integrity of the call. Thank you. So, but it's just the psychology of people, the psychology of the market. So the mind say 228 is a sell. Not sure I'm following that one or that thought process, because we're not analyzing buy or sell right now. What we're doing is rounding. And so look at right here. Look what happens, okay? So here, right here, what you're noticing is look at all the reaction that's happening around that level. All right, look at how the market reacts to that psychological level. All right. So look at, I mean, I'm just, I'm not really trying to get into retail. But I'm not, one of the reasons why they do that is tax purposes. They never just make it $29. They do that for tax purposes. Because when you get to another dollar, now it's more taxes you got to pay, because you pay for every dollar and things like that. So, but that's not where I'm trying to go with it. Where I'm trying to go is your mindset, like how we just automatically do it. And that's why I mentioned from the time we're children, because even my daughter last year in school, as they close out the school year, they were on rounding. They had to round, right? We're taught if it's 6 and above, we round to the next one, or we round down, if it's below that, that kind of thing. So, it's a or don't even quote me, because I'm like, is that even right? So, but it's the thing is we're taught to round, and that's something that sticks with us through life. And so as you look at where these orders are placed, I want you to look at, right, exactly, it's psychological warfare, right? So if you look, I'm gonna call it warfare because it's really our minds. So look at how the market is reacting around these levels. You see that? You see how the market, look at all of these. And this is and so this is where a lot of orders take place. Remember, we're watching real transactions. So this is where a lot of orders take place, right? This is where a lot of activity happen. And so that's why when you see market consolidation and when you see things like that, that's why all of this is happening around those levels. So even if you're trying to grasp, like we talked about pip reaction time and things, even if you're trying to grasp that, like you're trying to fine tune how to take profit, if instead of doing the 10 pips, like, because you don't, let's say you're about 50-50, or you're still trying to finalize it or something, you can actually get a little bit deeper in this and make your take profit at the zeros. And I've worked with some people to do that and had them do that because they had like a really lagging pip reaction time. And I tell you, their accuracy rate increased tremendously. Just even focusing on the zero at the lowest level, not the pipette. I'm not talking the pipette. I'm just talking about there. So it's all psychological. It's all meant. So that's why the zeros are important. So now, and still, guys, go back and watch the training. Go back and watch that training. So now let's talk. Let's come back over here, because where are we at? We're at a harmonic pattern right here. So we're at a harmonic pattern. And now even in here, you have your midpoint, which is going to be, let's put the midpoint on here before we even get into that part, right? So, right? So you have your midpoint. So we know from here to here, right? Let me see, because I want you guys to see it. Look, I gotta find my tools. So we know from here to here, right? That was 100 pips, right? That's 100 pips from here to here. So that means from here to here is 50. But so that's that midpoint. So that's those of you all who might have said it was 28.50, right? That's the ones that might have, we might have kind of focused in on that 50 point because we round there too. So all of this is psychological. So then we start thinking in quarters, like, oh, it was 28.25, or it was 28.50, or it's 28.75, right? So you start kind of thinking in those levels. And so if we're thinking in those levels, that's where actions actually take place, right? That's where all of those things actually happen. And so now my blue lines are our psychological levels we just put on the chart, and our yellow lines, look at how this one is dead on top of it, right? All right, actually, let me thin this one out just a little bit. We might be able to see that yellow line. So you can see that yellow line until you see it, it's right there. So they're like so tight and so close. It's almost on top of it. So what did I tell you at the beginning? That harmonic patterns, I've always liked harmonic patterns. I've always liked it from an education standpoint. I've always liked it from helping you learn the market. I've always liked it from helping you see the skill set. I've always liked harmonic patterns, right? But I've always emphasized we don't blindly trade them. Okay, please, please, please don't blindly trade them. But what they do is they help you see the market, and now you get it. Now this is the why behind the what of the why I like it. Because now here at these levels, you see, this is where a lot of reversal patterns happen. A lot of your harmonic patterns happen around these psychological levels. So what you're seeing where our ultimate take profit is this midpoint, right? It's this midpoint. And so look at how the market reacted. We got some consolidation around that psychological level, right? We got some consolidation there. And now look at how the market is pulling up, right? Is rejected off of it. Now, another thing I want to emphasize, it can pass it. It cannot touch it. It's still considered a completion, right? Spreads widen. You know, activity is happening. Once again, to make it make sense to you, where's your stop sign, right? You got a stop sign in the market. That's this level, right? A stop sign that we get in our car and drive every day. How many of you all stop in front of the stop sign? How many of you all stop behind the stop sign? How many of you all stop exactly in the same spot every day? You don't. None of you all. But some of you all stop in front of the stop sign, which is here. Some of you all don't even get to the stop sign, but you consider it a stop. So it's the same process, right? You wanted the in front ones. So, but it's the same thought process. So just because it touched the line, came past it a little bit, and then turn around, then you start seeing all this rejection, that does not mean it didn't respect it. It does not mean that it didn't, you know, happen. Like, that's not what that means. So you can see how it touched the line, it started rejecting, and then turn around, and now we're pulling up for a buy, right? So this is that level. So from here to here, that's that midpoint, and this is actually where the harmonic pattern was identified. But you also see my market structure that's happening in here, right? I also see that market structure that's happening in here. Any questions, comments, or testimonies? Questions, comments, or testimonies? Questions, comments, or testimonies? I want this to make sense to you guys. And I want you to know why I'm putting all those lines on the charts in the mornings. You're like, why you have so many lines on the chart? So because I want you guys to get past just grabbing my 10 pips and running, which is fine. There's absolutely nothing wrong with that. But what I know for a fact is that when you understand and what you're doing, it's going to have more impact and more success, right? It's like, this thing is just going to start making sense to you. It's really just it's going to be so clear, you know, you're going to own these charts. And that's what we want. I want you to own these charts. I want you to own these charts. So let me see you say it's amazing how the harmonic scanner is close to absolutely. It is, isn't it? And when you start pulling them, you'll start seeing that, because a lot of the reversal patterns happen around those levels. It's just like, are you really just gonna be driving and then just stop in the middle of the road and just turn around? You're gonna always, it's like you're gonna get to a certain point before you make a decision to kind of turn around. So it's like, you're not just gonna randomly just like, oh, let me turn around. And that's why I'm even telling you guys, like, even from a 10 pip standpoint, if I come in here and draw, you know, and I like, if you come in here and you just kind of like, you know, you're trying to get fine tune that take profit, even from a 10 pip and cash out standpoint. So look at how I just made a thin one in there. So if you're still trying to figure out, of course, we've trained on a line chart. But if you're still trying to figure out how to drop these psychological levels, like how to do those things, this can help you too, right? This can help you too, because even though this one kind of bypassed it a little bit, look at where it kind of, look at where we kind of come down to, right? And obviously 1, 0 is not going to have as much impact as 2 or 3, right? But it's still going to have some respect to the market. And as you can see, that, you know, this one obviously is a 1, 0 or 1, 0. So I'm gonna call them our mini levels, but you can still see how the market reacts and look at it. Look at the market. So the blue lines are psychological. I made the mini levels. I think I made that part up though. But the mini levels, you know, I'm kind of making the mini levels where the market's kind of reacting, right? And you kind of see that. So now my chart looks like a coloring book, but now you know why it looks like a coloring book. We started from a clean chart. Which is where you start from. And all we did is kind of come on here and see, but can you guys see how the market's respecting this? You know, any more clarity needed, any questions, comments, testimonies? Because next week I kind of want to help you from a top-down analysis approach, but any questions, comments, or testimonies? Any questions, comments, or testimonies? We have about 10 minutes left. I don't really want to mark up another one. Let me see. I don't know. We might do that NZD real quick. So, but any questions, comments, or testimonies? Actually, I'll mark up this one since we got a little bit of time. But now's the time to ask. So I'm gonna go ahead and mark this one up. So first thing first, how do we do it? Get the harmonic scanner, put the numbers on here, right? Now this is if you're trying to do more than scalping, obviously, right? So obviously if you're pulling from the scanner, you're doing a little bit more than scalping. Or you're looking at, and this might not be the best one because of what, but I'll still show you. It's all the same, but it might just not be the best one. So what you're seeing is this little consolidation area, right? That's honestly what you're seeing, where this harmonic scanner identified it. And obviously, let me not say obviously, but I'm gonna drop that on there so you know that it was identified for, right? It was identified for a sale. And so am I taking a sale right now? No. Actually, this might be a good one to talk about. So let's drop this on here. So let me turn this one blue. And let's pull our level up here. This might be a good one. Actually, let me go to the little wheel so this don't take all night. All right, I'm gonna thicken it up. You can still put the pivots on here. The pivots help you understand the center points in the market. We have not eliminated pivots. Weeks ago, if I'm not mistaken, you said don't use the lines when trading, but you use them for training. No, I never said don't use the lines. You might be mixing up something that our trading diva said on the HFX call in mix with what I'm saying. And it's not that she said don't use the lines, because I think I know exactly what you're talking about. If I come back over here, like we had the line chart here, what happens is when you're trading something is like a HFX or something like that. I've had another question on it. That's why I know exactly what you're talking about. When you're trading on there, when you come to the line chart, right? What happens is you see all of the movement and activity. And when I'm scalping, when you're scalping, especially like HFX is in the money, out the money, period, right? So when you're scalping, what you're seeing is like all these little lines in here, right? I need all of these support and resistance lines. So what you're seeing is a line chart. And remember, I just said that it's considered a completion, whether it touches it or not. But when I'm doing HFX or when I'm in there, I'm trying to be in and out of the market like that, what happens is I have to pay attention to each one of these on my lower time frames. And so if I'm trying to get here, look, my line chart doesn't touch that. But remember I said, because orders happen there, the spreads widen, that right up in here, that's still considered a completion. Like it's still considered that it actually made it to that level. But if I'm scalping, especially just trying to be in or out the money, then I need to pay attention to where these little touches happen, because where the market is reacting to these touches is, where you want to click that button real quick for your 1 minute, 3 minute, 5 minute HFX trade, right? My sweet spot is a 5 minute HFX trade, but when you change it back, those lines are really important. So that's what the difference is. It's not that, it's not there. That's what the difference is. All right. So hopefully that makes sense. So, so I said, now I always tell, you're welcome. I always tell you that the arrows are for training. Like if you came and sat in my house, you would not see arrows. Like that's not what we do. We don't do this. All right. because it's going to impact it's going to impact your reaction time. So I definitely have said that. All right, definitely have said that. So now, as I'm looking here, all right, look what this is. So we identified, right? And this is what I mean by some going to play out, some not, right? So we identified a harmonic scanner trade that was identified. And we're not going to blindly take this. Absolutely not. We probably won't even take it. So what I want you to see, though, is look right here. Look where this is at. So here, like when I look at my big picture of the market, before I even look at my psychological level, look at all the rejection that's happening around here. Now, when I put this psychological level on here, I got 2 zeros on here, right? The more zeros, the more impact. So look at the zeros right there. Now look at how the market is reacting around there. You see this? What I tell you, a lot of consolidation happens around them as well. So look at how the market is rejecting. Look at the consolidation as I look left. Look at what's happening. Look at this, right? So you can see how the market's reacting to this. And so basically the market rejected. It did not bypass this level. It didn't push down, it didn't push through. So do harmonic patterns happen around these levels? Absolutely. Does that mean that I'm going to take it? Absolutely not, because you still have to analyze it. We don't blindly take any trades. And so you see how it's rejecting off of this line, and now look at how it's turning around, and now it's pushing up. Now, based on the momentum that's happening, I'm not looking for a sale. Now, will this, now, let me say this, because I'm going to just say this. Can this pull back? My 4 hour is in a buy, right? That's a beautiful 4 hour candle. My hour is also in a buy, but I am also overbought. So there is an expectation of some sort of pullback, right? There is some sort of expectation of some sort of correction because my hour is overbought. Now, how much? That's the other question. So if this does close out, it's strictly because it's a stronger correction. That's the only thing that this is going to be. This is going to be a correction in the market. All right. But am I really enthused about taking it? Because look how raggedy this is, right? Look at how each one of these candles have been wicking out in this zone and in this area. So I'm not too enthused about that. For me, what I'm looking for, right? Now that we know that triggered, I know that I'm here. I'm looking for this to turn around so we can close out. But you looking to the left, you want it to kind of bypass the area. And then if I look at where the top of the rack, yes, then I'm calling it a raggedy area. You know, everything is not always smooth. So if I look at where the top of it is, look, it is at the top of the raggedy area, which is another psychological level. So, and that's the thing. We see that, and from here to there, that's still 100 pips. It's still 100 pips in between here, right? GBP NZD is one of the most liquid currency pairs, okay? It just is. So this is why I know y'all coming here and trading anyway. So, but you still need to know what you're trading. Because look at this, this don't even look like a lot, but from here to here, that's 100 pips still. So you grab that movement, you just know that if you haven't already grabbed that or weren't doing that, it need to bypass this before you continue, because you need to let that correction finish. All right. And that's why I know like this is like one of the most liquid pairs. So questions, comments, testimonies, so we can transition this call. Any last minute questions, comments, or testimonies? We went from 10 minutes to, oh my goodness, it's 10 o'clock. Questions, comments, testimonies. All right, guys. So hopefully tonight we got a little bit more clarity. You know, we did a really in-depth training on psychological levels, and having done a really, really in-depth training on psychological levels, you know, I really wanted to kind of come back and kind of implement it and kind of show you, because I told you in the mornings, what we're going to continue to do is mark the charts up so you guys can be able to see it. Just mark the charts up. Let's mark the charts up. I want to make sure that you guys can see it and you're having complete clarity and understanding, all right? So we always want to make sure of that. And so now, clarity, thank you. Awesome training, thank you. Thank you, guys are very, very welcome. So with that being said, ladies and gentlemen, we will continue building from this. We'll continue diving in, and we will continue implementing it in the morning calls, right? That's what we're going to do. And do not forget, tomorrow's non-farm payroll. So, you can actually begin to mark your charts up and actually look. If you mark them up in advance, I want you guys to see tomorrow how the market reacts to those levels, how the fundamentals impact, with the market and things like that. So I really want you guys to begin to see it and see it with more clarity. All right. But it is time to transition